wanted to talk about AKER, and I saw that it was on the top gain percentage winners. So let's see, what was it? Okay, 67% high today. So we saw it go from 150 to 275 today. And what I want to do is talk about why it went up that much. I don't. I'm not a fundamental analysis person. I don't trade off of fundamental analysis. But what I do want to see is I want to look at the chart, see if the chart gave us any indicators that something like this could happen, and what the setup looked like before it happened, right before the pop today. So I'm very into Investors Underground, and I love his method, ABCD pattern. That's pretty much how I base my trades. And trade on the wire, he goes off of a 5-day scanner. And in combination with those two people teaching me and following them on Twitter, I've really grown to understand that for me and my style of trading, technical analysis is a really important tool, right? So today I just want to go over AKER and see if we saw anything in the pattern that could kind of help us and indicate some kind of patterns we might need to be aware of for future trades. And when we see these patterns, hey, maybe we should consider that trade or look more into that trade, right? So right here I'm using I just pulled up AKER and I saw, well, we see the 10-day chart right here, right? Right here. And what's interesting to me is that it was hovering around 150 the last 2 days before it popped today, right? And I really wish, what I do every day when I scan is I go through the 5-day chart and then I go through the 10-day chart. And then I look at what's trending, you know. And sometimes I forget to look at the 3-month or the 6-month, 1 year. And when those setups on those charts look perfect, you gotta also look at the 10-day, 5-day charts, right? So what visual cues, what technical cues was I looking at if I would have seen the 3-month or the 6-month, right? Specifically, what would have alerted me would have been the 3-month, right? Because the ABCD pattern, and for those of you who aren't familiar with the ABCD pattern, let me pull it up. Let's see. All right. This is information from Investors Underground. I just took it from his website. And if you want to learn more, you just go to tandemtrader.com. So, what the ABCD pattern is it's kind of a high of day, which is the A, then it settles down, which is the B, the low of day, and that kind of, it's not going to retrace all the way back down to where it started from, but it tends to retrace around and base at a certain level. Once it bases, then you see kind of another valley, a smaller A, right? But you see that same pattern, hill, valley, right? A, B, C, D. And what we're looking for is that base on the C level to kind of start inching higher lows. And that just means that it's going to start testing the C level, right? So we go high of day, a low, and then there's another kind of mid-level high of day, right? So there's two highs of days. And it's a C level, and then we have that B again. So as a general principle, I'm looking at ABCD patterns pretty much in every time frame. And when those time frames converge, that's when I'm most interested in the trade, right? So let me show you what I'm talking about. And Investors Underground goes really deep into this in his DVDs if you want to learn more about that. So, we don't always necessarily have to have the whole ABCD pattern in order for us to consider something or look into it and be interested as a trade, right? So, what I am looking at is I look at, before I make a trade, I say, what part of the trade am I in? Am I at the A, mid-level A? Am I at the B? Okay, am I about to start the C pattern? Or am I towards about to break the C pattern, right? So I look at this and I say, okay, am I buying here? Am I buying here? If I buy here, is it the B? If I buy here, is it the C? So always pay attention to where you're buying into and look at the time frames to tell you, hey, in one time frame you might be buying the A, which might not be a good trade idea because you're buying at the top. There's no reward, it's overextended. You want it to pull back a little and then establish a base where your risk to reward's a little bit more defined, right? So always have this in mind, A, B, C, D. So let me go back to the chart and then talk about what part of the chart I'm looking at, right? So what's interesting about this 3 month that I'm talking about, that if I would have seen it, I would have really considered it. And what part of it is this basing, which I kind of, this is not really an A, but we could just, in the chart, we could consider it as an A, right? And it's basing. So I see this basing as a B, and then it going from 125 to 150 as the start of a C. So that scoop pattern, right? And then it kind of bases down at the support level again that it held for pretty much 3 months at a support level of 125. And then as you see, it started testing 150 again. So as a 3 month chart, that would have interested me, right? Because I can clearly see the trend of where this could go. Even if it tests that channel from 125 to 150, then comes back down slowly again to 125 like it did right here, and then holds 125, at least I know my risk to reward is 25 cents, right? But what I look for in that 125 to 50 cent level is I always look internally to say, hey, the 3 month looks good, or the 6 month looks good, which in this case it does, because again we see that supports, the resistance right here is 150, and resistance 150, resistance 150. Okay, we see that. We see another resistance level here at $2, and then we could consider $3 another resistance point, right? Because of this $3 level right here, and on the 1 year this $3 level, which is a support and a resistance depending on the way up or down, right? So if we see this 3 month pattern developing, or 6 month pattern developing, well, what I would have done next is I go down to the 10-day. And on the 10-day, I see, oh, it's hovering right around 150, right? So I see I see AKER tapping on 150 level. And what I would then do is say, okay, it's tapping on 150. On the 5-day, it's tapping on 150. It has 125, right? I would really have paid attention to this 3 month chart in tandem with the 10-day chart. Why? Because it's hovering at 150, right? We're looking at it to break 150 because on the 3 month chart it's breaking, or it's tapping on 150. On the 6 month chart it's tapping on 150. On the 1 year it's tapping on 150. As an average, it's tapping on 150. So what am I looking to get out of the trade? Okay, first, this is how I base my trade ideas. What I do, check Yahoo. Let's see, it's pulling up Yahoo. Let's check it out. I checked the float. Pretty nice, right? 4.4 million. And all the float means is just how many shares are available to be traded on the open market, right? So I see 4.5 million shares. And when something has a small float, it goes up fast, right? So what would have intrigued me? 3 month. Then I got the 10-day. It's hovering in that area. Again, this is on my radar. And what I'm looking at is, okay, it's tapping that 150 level. If I consider this trade and I get into this trade, 125 would be my risk to reward, 25 cents. Okay, but what's my upside? I see this level at 75 cents. Okay, and I see this $2 level. All right, I see my $3 level. But then I also consider the float. Okay, this is a small float. Let me see how many it traded today. Okay, almost double its float. Let's see, 7 million in terms of volume today. So what I combine all those things and I'm considering, okay, likely scenario, it touches 3. So I have $1.50 upside, or if we just limit it, just say 50 cents, it hits $2, right? It just goes to $2. But then if it touches $2, I'm thinking it gets that attention even more. So I'm saying 250 area, right? So let's see. I consider all those factors and then I say, okay, if my upside is $1, just $1, let's just say $1, and my downside is 1/4. Let's see, risk to reward 4-1. Anything about 3-1, 4-1. I love getting into those kinds of trades. 5-1 even better, right? So what I'm looking for is, really, you don't know if something's going to pop this heavy from 150 to 275, right? You don't really know that. You can put all these, in terms of technical analysis, you can put all these technical cues together. We got the 10-day, we got the 3-month looks good, the 6-month looks good, the 1 year looks good. And the float is great because it's a small float. It has the ability to run really fast. And again, what I'm talking about when I look at the ABCD pattern, if you look at this 1 year, it has that A, so you could just take all these months in combination. You see the start of the A, the top of the A, the bottom, the midway going down to the B, and then this is the B. So we see this B level support, and we see this 150, 150, 150, 150. Okay, if we break that B base level, and then we're gonna start uptrending towards creating a C, right? So what we need to just be concerned with before we get into a trade is, where are we in the pattern when we buy? In every single time frame, right? And the more time frames that line up, the better the results we get. So right here in the 1 year, I told you I am looking at the A, and then I see the base of the B, and if it cracks that, also don't just say A, B, also look at the smaller time frames, right? Like I told you on the 3-month, we got the base of the B, then we tap 150, then we're basing off 125 again, and then we go back to the 150 level. So in this scenario, we could say that this is the start of the A, then the top of the A, then the basing back at 125, then we're breaking the A, right? Or breaking the C. They're all just hills and valleys we need to break, right? So we could say, okay, A, B, C. Okay, basing of the C. It's about to crack the C. Okay, it cracks the C, passes the A, goes down to the 1 year uh, top of the A, right? So we need to consider every single time frame when we're about to trade. And I just wanted to talk about AKER because this is, again, it wasn't, I tend to, I would have let this play out, right? It's hovering in the 150 area. And let's see what it traded yesterday. Let's see. Yesterday it traded 136,000, and then the day before that 89,000, and then today it traded 7.5 million almost, right? So let's see. So you know, you see this as in terms of my kind of trading, right? I would have seen it go from 125 to 150, and what I kind of would have done is based on how it's reacting in this level, because on 10 days I can really see like a pulled out picture, and I could see more nuanced detail, right, of where that break is, that 150 level. I see that break is 150, but if I would have seen this downtrending, I would have waited at the 125 level for it to either buy again at 125 because of that history of it basing for the last 3 months. I would have seen that. But since I see this little curve up, right, it's hovering. Again, you see this little smaller, we're an A, and then it's kind of like about to break another A. We could kind of, in a sense, say that. So I see this, and again, you don't always get these 100% formations of ABCD patterns, but when you see something like this, and again, the risk to reward's 25 cents for an upside of a potential dollar. It it looks great, man. You can't always have it line up because again, one that just came up, PTIE. That was a few days ago, and I missed out. Why did I miss out? Because it was trending at this 70 cents level, right? We saw this. We see a great 3-month chart. You can clearly see the pattern. It's either basing, right? And then it comes up for the C level, and then the base of the C at 70, right? We see this here too. It goes base, C, base, C, C, and then it kind of tries to break that C in the bigger picture, right? We're looking at the bigger picture. So within this 3-month chart, I was waiting for it to kind of start tapping on 80 cents again, and then buy in at 80 cents for this, let's see, just say 75 cents to go touch this 125, 150 level. Okay, so I was looking for a 75-cent upside. But again, just like this AKER trade, you don't want to miss out because you're waiting for the perfect formation. I look for B pluses, anything about B plus. And if all these charts are lining up like PTIE did in this little area right here on the 3-month chart, on the 6-month chart, on the year chart, again, it's the same thing as AKER. What we want to look for is a trade that gives us as many technical cues as possible, and we're just looking for that ABCD pattern. So I just wanted to talk about these charts, and let's pull them up. Let's see, AKER and PTIE. Let's put them on the turn. Let's see this. Let me pull this down. Let's see. Let's look at their 10-day, right? So I kind of feel like we could kind of see this AKER kind of play out as the same thing as PTIE, right? So I just want to look at this pattern and start off by saying I'm going to be looking at more of these charts, and I hope you guys follow along and that these tutorials can kind of help you get better trade ideas and really maximize your potential before you get into something, and solidify your risk to reward, because trading is something you need to master, and these small little concepts, if you master them, you'll be doing great jobs. So I'll see you on the next video, guys. Bye.